It's Monday. That means it's Setup Monday here in the Americas, already Tuesday in New Zealand. I wanted to highlight today some possibilities. Open your mind. Look through your third eye as far as what may come. Look at some cloud comparisons, some cloud fractals. Look at some pitchfork comparisons. Get a stand as far as where we are in this crazy market right now. So if we look at seasonality data, Bitcoin has, at this point, semi-robust amounts of quarters that are fairly statistically significant. I don't know, I haven't run any tests on this, but at this point, this data looks a lot more sound than something like ETH that hasn't been around as long. But the bottom line is Q1 since 2014, has closed negative. Okay, so this, I finally narrowed it down to my thesis here. Q2, Q4, bullish for BTC. If we look at post 2013 especially. Pre 2013, we had some insane quarters, right? Plus 500%, plus 600%, plus 2,000%. Let's say all those are outliers. Those days are gone. And let's just look at the past 6 years of data. Okay. So right now, a month in roughly, BTC is outperforming the average by a lot, and it's outperforming 2017 even by a lot. I still continue to think Q1 will not be that great of a quarter for BTC. I'll show why on the charts in a second. So it's hard to put my mind slot into the bullish bucket because I'm looking at seasonality, and seasonality is not great. Q2, when that rolls around, my mind is already bullish regardless of how the charts look. Now if we move to ETH and we look at post 2017, which is roughly the BTC's 2013 equivalent, we didn't have any plus 400% years after 2017. Things settled down a little bit. And again, we see a rather unique situation for ETH in that it's insanely strong for its Q1. The strongest Q1 it's had since 2017. Way outperforming the average at this point, skewing the average much higher. And when I look into Q2, also very bullish. So again, my seasonality is already set for Q2. Q3, Q4, not so much. Q4 last year for ETH, a bit of an outlier. It's almost binary for ETH. It's either negative 30% or positive 80+%, right? Like there's not a lot of data here, so it's hard to really look at that and be serious about that evaluation, but that's the data we have so far. Nonetheless, Q1, extremely strong for ETH. Q2 expecting, again, strength. It's never closed negative. I think that's extremely important to look at going into Q2. It's never closed negative for ETH. Now, if we look at ETH BTC, something I hadn't done until today, because somebody had mentioned, Q1 has been the most positive quarter for ETH BTC. And I thought, that's strange. That doesn't really make too much sense. But looking at the data, that is the case. It's only had one negative quarter in 2019. Average since 2017 is 20%. Something else that's interesting is Q3, Q4 have averaged negative, essentially. And there's never been a positive Q4. Now, this is probably why there's never been, essentially, a negative Q1, is because there's never been a positive Q4. So very interesting. Again, not a lot of data here, but the way this is stacking up for ETH BTC, this looks like the quarter if it's going to happen, based on seasonality data. So it makes sense that ETH BTC is outperforming here relative to history. Q4 always negative, Q1 pretty much always positive. Looking at some charts and why I'm expecting shenanigans and why we should look at all possibilities here. All possibilities. 20K, 40K, 100K, whatever. Look at it all. That way you're prepared in case shenanigans happen, because shenanigans inevitably are going to happen this week, as they already are in the US markets today. Just stuff all over the place. GME GameStop was halted 7 or 8 times at this point. I mean, just stuff that just you don't see every day. So I expect shenanigans for BTC this week because it's a CME futures rollover week. The August 3rd contract is closing on the 29th, which is Friday. If you're in that contract, typically the traders will roll it over pre-expiry, a couple days before. So that causes volatility. The expiry itself causes volatility. There's options expiries as well on Deribit. Just a lot of churn of open interest coming into this week. So that's why it's important to pay attention. I'll talk about ETH in a second, but February 8th is the open of the CME futures contract for ETH. Another reason that there might be some interesting shenanigans there as well. Leading into the CME futures opening in 2018, it was essentially the BTC top. It's a little bit different in this case in that situation felt like it buy the rumor, sell the news. And once it opened, it was the literal top. Obviously, that could be the case again for ETH, but I'm not necessarily counting on that. Just, again, possibilities here. Let's set the parameters where we are in the trend. Pick anything you want. I like Pitchfork. Great. Okay. 3 points. Rate of change. Here's our median line. We have the 200-day moving average. We have yearly pivots. So at this point, the price is relevant to me, really, because it's all relative to where it has been based on the rate of change. So I like anything down here. Is it the previous all-time high at 20K, 24K? Yeah. It's also the median line. It's also the yearly pivot. It's also the 200-day moving average. It's also the weekly Kijun at 2300. So there is a myriad of supports at between 20 and 23. Tons of support. There's support at 28 based on the median line here. So if this diag doesn't hold, which is basically how I'm looking at this, if this Pitchfork diag doesn't hold, like it has 5-6 times at this point, I am expecting a median line at 28K. Again, the price is irrelevant because I'm just looking at what this is telling me. Now, upside is all just these yearly pivots. That's set in stone. Doesn't really change anything at the moment. If we look at the cloud is slightly troublesome. So we got our Kijun bounce finally after the Tenkan was stealing the show consistently. Just when you get these Tenkan bounces like this, it's kind of insane because that just shows how strong this trend is on the daily. When those start to fail, watch out, right? And fail it did. It failed in a spectacular fashion all the way down to the Kijun. That's why you put your bids there. When you see a free fall, windfall, waterfall situation, look to the Kijun, okay? So we had that trade, great. If you're like me, you're out of margin longs here because you're expecting just Chop City, USA, population U for the foreseeable future. Something else I'm looking at going into Q2, so pre-Q2, is the possibility of an edge-to-edge short trade from basically 31 to 26. So that's like a setup of the quarter, the remaining possibilities for February, March. If we look at gold on the weekly chart, pretty interesting setup here. Oddly similar to BTC. We got our Kijun bounce. We have this massive cloud. Same thing. So BTC and gold may follow each other, although sort of different time points because this is the weekly for gold. So it might be a little slower, but gold is setting up for the same exact trade. Again, price kind of irrelevant. It's just the trade setup, right? It's 18 to 16.5 or whatever it is. So if you're trading BTC, I would definitely watch this on the weekly because if this short entry triggers, then almost certainly we're going to see a short entry trigger on BTC. Now, if we look at other types of cloud fractals for BTC that looked like this was 2019. We just get 100 days or whatever it was of consolidation, eventually breaks down, leading to a few more months of downside. That's a possibility here. Let's say screw to Q2 seasonality. This just all fails, goes out the window. I think that's the least likely scenario. How this is sitting at the moment, we had throughout 2017 several basically cloud retests with TK recross over and over and over again. All that is possible here. We had this similar setup in late 2017, basically an M double top. Even though you had your Kijun bounce, it still broke through the cloud, leading to a year of downside. So all that is possible. Keep that in your head. Don't be married to your position if you are mega long up here still. 20-week SMA is also at 21.5, just to add to that. Support pile, should things go squirrely to the downside. So I'm not bearish BTC. I'm ready for shenanigans. Like I said, be prepared to know where your stop losses are, where your next bid placements are going to be. Set up Monday, right? This is what we talk about. I'm not bearish. I'm just realist. I'm being a realist in that if we get some massive volatility dump, that's where I'll be looking. Ultimately, I don't think that any of that's actually going to happen because of the stimulus that's coming in the US, and that's inevitably just going to push everything higher. Here's ETH on the Pitchfork. Again, price kind of irrelevant. I'm just looking at Pitchfork here, and Pitchfork says, do not go long here. Are you nuts? It's at the top of this range. Price wants to mean revert to yearly pivot, median line, 200-day moving average, tons of support, basically between 5 and 700. Hence that poll on Twitter I put yesterday or the day before, what comes first, 1600 or 600? Most people said 1600, which makes sense. It's pretty close to 600 or 1600. It's pretty far away from 600, but that's the impetus for where my thinking is on that. Again, I don't care where price is. Price-wise, I care about where it is based on this rate of change, which says it's essentially parabolic. Now, the only other time this has happened, basically you're invalidating the pitchfork to the upside, was 2017 BTC. Very similar, eerily similar situation where you get, this was like 2 weeks maybe of sort of consolidation up here. Very, very similar. Very similar, very parabolic in nature, probably a little slower, but we all know what happened after early 2017. This was actually Q2. Is this Q2 or Q3? I don't know, somewhere between there. All this happened. It actually busted up, for months and months and months, and inevitably broke even the R5 yearly pivot. So R5 yearly pivot for ETH is 2600. So if this goes nuts, which I think is the least likely possibility, we're looking at 2600 easily, I think. And we're talking a new stage of parabolic nature with afterburners, with the NOS, whatever extra thrust you want to think about. That's where we're headed. And I put February 8th on here because that's a CME futures open date again. Now, if I was CME, if I was somebody with a lot of money, I'd say run this sucker up as high as we can, as quick as we can, so that the short is so obvious and so glorious, and that the downside percentage is so succulent that the money made on that trade would be astronomical. So I'm cautiously bullish until February 8th, and then I'm just expecting who knows what. 50% drop. This is the other thing people don't realize with alts. A lot like this catch-up trade, which is where how ETH got to here from BTC. This was a catch-up trade for BTC after BTC's all-time high. But what people don't realize with alts is there's kind of no honor among thieves, in that the holders here aren't strong. They're new, and this can drop 50%. Now, I don't think that's super likely in a bull market, but I'm not ruling it out. People who are new to crypto or new to ETH aren't going to stick around for the minus 30% down day. They're going to panic, and we're going to get some stupid wick to 500-600. That's just par for the course in altcoins, specifically ETH. Now, one thing ETH has going for it is that it's continuing to lock up more and more ETH in ETH 2.0. The DeFi pulse, or the DeFi, ETH locked in DeFi has flattened out, but the ETH locked in 2.0 has continued to increase. So it's hard for me to be mega bullish up here, the bottom line, because of the potential 50% downside, right? And people are going to hear that and think I'm nuts, and that's fine, but that's what I'm looking at here. Because ultimately, again, if we do break up, great. Here's the 2-year or the 1-year MA multiplier. So this is the 365 MA in green. This is the 5x, the 365 in red. This is going to continue to violently move up because the 365 MA is moving up significantly quickly, very significantly, very fast. And that's going to approach my 2600 level based on R5 yearly pivots, whatever. And just backtest this, right? Here's an N of 2 or 3. Resistance eventually broke down, resistance, whatever. This buy zone looks pretty ugly, but it is what it is. So if this breaks the level when we get there to the upside, I'll be selling my ETH happily at that price, whatever it is. 20, 2,000, 2,600, whatever it is. Here's ETH on the daily cloud. It's had, a mixture of Kijun and Tenkan touches all the way up. It doesn't look as crazy as BTC does as far as the downside concern. The support cases for 500-600 aren't there on the daily cloud. Really, what I'm seeing this just like melting up over and over again. This, whatever this fractal is, whatever you want to call it, how it eventually broke up. It looks like we're setting up for that again. So if I had to choose long or short here, going into ETH price discovery, I think it's hard to be short price discovery, right? I don't think that's a smart trade. At the same time, ETH has just been unable to actually go into physical price discovery. It's allergic to price discovery, like I said on Twitter today. Here's the 4-hour cloud. Not a great hit rate, but it is telling you to be long ETH here based on all the parameters that you want to see, minus the lagging span, which I don't have on here, but this does look like a long entry trade. And ETH BTC, just to wrap up ETH, has been on an absolute tear since earlier in the year, just breaking level after level after level to the upside. I do like 05 eventually. I don't know how it's going to get there. I don't know in which way. I don't trade it, but it looks incredibly strong here. So Q1's its quarter. It's got 2 months to do something before it historically has done nothing or died for the rest of the year. Just want to hit on Link really quick. Link USD, again, pitchfork things in the median of the pitchfork above it. This is just a buy and hold for me because much like the BTC pitchfork in 2017, as long as it stays in this pitchfork, it's a bull trend, and trend is your friend until the end. So I like 60 as a high for the year or an inevitable touch for the year, and pitchfork says that's fine. Here's Link BTC, kind of ugly, but I added this massive wing because we now have 2 touches, both upside and downside, as far as expectation. And again, some people are going to look at this and say it's malarkey, but if we have an upside touch and a downside touch of a level, I'm just going to add it to the thing and not delete the pitchfork. That makes the most sense to me. This looks like it wants additional upside, again, median line, somewhere around 0.01 or whatever that is, BTC. So overall, we got a lot of fundamental events coming up with CME. We got a lot of dates at CME options. We got a lot of macro stuff happening in US markets, new administration, new stimulus coming, more money printing. I think being long volatility in general in the next 2 weeks will be incredibly prudent. Being nimble will make the most sense. And being open to possibility is the most important thing here.